Are you dreaming of owning a condo but worried the VA loan process is too daunting? Think again. Today, we're breaking down the barriers and showing you just how achievable it is to use that amazing VA home loan and buy a condo with ease. We'll cover everything that you need to know from the VA condo approval process, important considerations beyond the VA condo approval, how to use a condo waiver, and protecting your investment. So stick around and join us as we cover a good amount of information. And please smash the like and subscribe button and drop a comment below to help our channel grow and give YouTube its algorithm so we can help more military families. I'm David Piatek, one of the instructors at VA Housing Education. My background is in lending and real estate. I primarily help military families across the country. And I'm also still currently serving in the Army National Guard. And I have the amazing Lourdes Fernando with me. I'll let her introduce herself and then we'll kick things off.
Hi, my name is Lourdes Fernando, and I am an instructor with VA Housing Education. Also, I am an investor, real estate agent, and I'm super excited to bring this information to you.
That's awesome. Thank you, Lourdes. So the first part we're going to go over is understanding the VA home loan, like the VA condo approval process. And the reason why we kind of do this is out of our own frustration of what we see with clients coming to us or other people on YouTube coming to us and saying, well, I tried to go through the process, but my lender told me that I couldn't use my VA loan to buy a condo, or, a realtor will steer them away to different loan products just because they don't have a lot of experience working with the actual condo approval process and how it works, right? It's the number one question we get around condos is like, well, this building's not VA approved or it's denied and you can't do anything with it. So yeah, it's a big step for veterans.
Right. Yeah, I see it all the time.
Yeah. So I know, Lourdes, what's one of the ways that, folks can help identify these type of condos?
Yeah, so you can double check the, Redfin, Zillow, stuff like that will say it's a condo, or if you see something that says co-op, that's not a condo, that's something different. Also, if it says townhome, that's something different as well. So just knowing how to identify what is a condo would be step number one. And then, yeah, that's pretty much it. But you can, oh, perfect. You're going to bring up that site. So
yes, perfect. So I'll drop that in the comment section. So one of the things that we always, I think, recommend, Lourdes, is it's extremely valuable to actually go to the VA's website. And so it'll be right in here. You don't have to sign up or register, right? Like I have a login credentials from a lending site to be able to get into it, but you're really going to search condos based on where they're located. So I'll give you an example. Let's say Illinois, we don't put city or county because they misspell things, even like the condo association name all the time. And don't click only approved condos, right? You just put Illinois and you just submit it. Now, the thing when you're looking at this is that association names are not property management names, okay? So you're going to be looking and you're going to have to ask the association. You just will not know this information like by normally looking at like a listing, or like Laura said, like sometimes they actually have like a section for it. But a lot of times when I see them, I really don't see them. So you'll see sometimes it's based on property address. So here it'll kind of give you a whole list of like statuses on different condo buildings. And you'll see most of these are accepted without conditions, meaning that today you can go get a VA loan in this building with no issues, which is also scary because I'm going to talk about why that's actually a very bad thing. Because this condo that was approved back in 2011, that condo approval is still good. And Lourdes, do financials change in a condo every year?
Pretty much every year. So yes, you also have financials change, you have rules, regulations that change, and
Right.
at any time people can vote on, maybe they had rentals and now they're like, you know what, maybe we should do a rental cap because it's getting high up there. So yeah, we see condos changing all the time.
Yeah, and you made a really good point, Lourdes, is about that investment piece, right? A lot of people have this dream of like, I'm going to buy a condo, or like, let's say I want to buy a condo in Florida, which I'm with you. I want to do that too. But I want to Airbnb it, and then I'm going to live there half the year, and I want to rent it out the other one. Well, guess what? what are a lot of condos not allowing anymore?
Airbnbs.
Airbnbs. We see this all the time. Being enforced. So this is a quick way. Again, I dropped the search in the comment section, and you'll see this one was rejected. And that's most likely because it had some type of issue that the V didn't allow, which we're going to cover a little bit later. Let me see if I can show you that rejected, suspended, same thing. It didn't meet the requirements, so they never submitted the documents. But there's more accepted than not. But again, we're going to give you guys some tools around that on how to be able to actually get these buildings approved. So the one thing that you have to do with the actual getting a condo VA approved is that something that normally a lender would take care of for you. I know there's services that you can hire. What have you seen people like try to charge veterans to hire to pay for getting a VA condo approval?
Yeah, I have seen that happen where they charge because they don't know, the lender doesn't know how to do it specifically, so they'll charge to have a third party outsource and get the condo approval um, together. But yeah, I don't see it that often. I just work with lenders who know how to do them.
How to do them right. So, but again, it's I've seen them as high as $1,500 in extra fees. I think that's insane, and you really don't need that because a lender basically in a transaction. Okay, condos are unique compared to single family homes because on a single family home, right, you're just buying the property, the land, and you're working with title company, getting all the documents, and you're moving forward. In a in a condo, just imagine you and like 100 other people sharing a checking account and savings account because that's what's basically happening, right? And so then you basically try to manage the financials of that, and that's what lenders request from the association, like they would on any single condo. So one thing that we get resistance from, or we don't even tell associations, to be honest, that we're getting them VA approved. Like we just do it and go, voila, here you go, your condo's VA approved. Because people, no joke, Lourdes, because we're on a lot of these together. Sometimes they'll think like veteran people using their VA home loan don't have any money. They're just like doing 100% financing. They just kind of like discount the veterans using their VA home loan, or the opposite, or with that they'll be like, well, the VA loan is too hard to do with the condo. Right. So we've run into some of those things, which, speaking of that, like, what are some of the common misconceptions on that VA condo approval process?
Yeah, that it takes, weeks upon weeks. It can take months is something that I hear. I hear that, oh, there's no such thing as a waiver. I'm like,
Yeah.
yeah, that's funny because I do them all the time. Um, so I hear that. I also hear, yeah, it's not FHA approved, so it's not VA approved. And they have that misconception that those are two of the same, and they're not really two of the same. I also hear, that the appraisal, that it's going to say that a common area is like messed up, that the appraisal is also going to be affected by that, which I guess it can be hit and miss on those, and you can probably elaborate on that. But I hear just every negative note that you can possibly hear. I hear especially even more so with condos than I do with single family homes.
Yeah, definitely with the condo piece, but like you mentioned, some of the misconceptions are that it just they have to have a certain amount of they have too many investors
Mm.
in the property, but that's not real because VA doesn't require it. They'll say too many units are past due potentially, but that's not a thing from the VA either, right? The VA is looking for only two things when they're looking at the decks and bylaws and rules and regulations, which is going to be, do they have leasing restrictions, or do they have a right of first refusal, right? Those are the two main things. So if they don't let you rent your units out, that's going to get denied by the VA. But in Florida, it's a pretty common thing, right? Or they don't do the reserves how they're normally done, right? Florida has a whole separate set of rules for their properties, but this is why you want to be able to review those documents. But what are some way, like who works with the HOAs?
As far as the approval process, the lenders will typically grab all that information from the HOA and then submit that over to the VA for approval.
Yeah. And what is your guess on the timeline? And people online as well, what do you guys think? How long does it take to from the time you submit a condo to get an approval or denial?
I'll
What's
see
some
if I get
takers
that
out there?
response.
Well, I'll let you guys know that we've seen them lately as fast as 24 hours, which has been insane. Like we submitted one on a Friday and Monday morning it was approved. And then sometimes we'll see them like a week and a half to come in, right? A lot of people are like 90 days. That's definitely not the case. It is a um, definitely a good thing. And Loris, what are some of the like difference in like values? 'Cause I always think like condos are a great affordable option. In some areas they're also really expensive. Like look at Miami. I keep going back to Miami because I keep looking there, right? And it's like $20 million for a condo. But but the condos are what does it look like compared to a single family?
So
Values
it,
go
it
and how the
really
market
it
is.
really depends. So here, like in my market, in the Chicago market, you can get a condo for $50,000 up to $1 million. Like the condos vary in range, depends on the amenities, the location. If you want a doorman, a pool, all the great stuff, it can just go up or down from there. If you are looking for parking, which you'll see typically, like you got to pay extra for a parking spot, like a deeded parking spot. And that just means you pay taxes and HOA on top of that. So it's like if you have a car, it's kind of like, oh man. um, what else? Yeah, it just varies. So when I talk to my clients about what condos they want, it's always, what are you looking for as far as amenities first? What are your must-haves first? And then the absolute first, well, actually, the very first thing we do talk about is budget. You know,
Right.
we look at that and then we kind of start going from there. And you know, uh, a big a big stopper for a lot of people is in-unit laundry. They want all the amenities, they have everything, but in-unit laundry is kind of like the deal stopper if it's not. So we can easily filter that out. So just certain things that we look for, and usually it's the budget, and then their criteria comes right after that.
Yeah, and actually made a good point, Lourdes. Is that condos are also unique compared to a single family home because HOA dues, like you mentioned, those amenities vary vastly. You can go to a place that's $90 a month, and I've seen a $92,000 purchase with $1,600 a month in HOA dues. So it varies widely, and that was in not in South Chicago. I did the condos were 92,000, but the HOA fees were extremely high. But you have to understand what you're getting out of that, right? And sometimes older buildings require higher insurance premiums, right?
Mhm.
They may have a special assessment coming up because they have to change out windows. All that's going to be factored in. So when you're thinking of like, what is my budget for a condo, you really need to dive in on a monthly basis because you might be thinking 400,000. You might be thinking one payment, but the reality is it might be a lot more because those HOA dues are a lot more. So thank you for that, Laura. That was an important piece to that. And you want to be able to ask, we'll leave on this one last note before we move to the next section, but it's extremely important that when you talk to a lender, that they are the ones that actually do the VA condo approvals, not a third party. If they have a condo department, that also makes it somewhat difficult
Mhm.
because like they drop the ball a lot, right? So your lender should have experience doing these and doing the condo waivers, which we're going to touch on in a little bit, right? You just ask them like, hey, do you guys do VA condo approvals? Can you approve any condo? And that'll pretty much let you know like if they have experience doing them or not. Now let's talk about some of the important considerations beyond the VA condo approval because the VA condo approval is extremely easy to do. One, and they, like I mentioned, they only look at two things, right? They look at the right of first refusal, basically like the condo has first dibs if you go under contract, right? Lourdes is selling her house. I come in, make an offer on it. she now has to take that, and she accepts it. She has to take it to the board to say, would you guys want to buy this condo at the same terms? Right. That's basically in a nutshell. And the other one is you can't have leasing restrictions. Like you can't limit a veteran from being able to rent a property. Some people don't care about that. That's why this waiver exists. And, it's really designed. Well, they kind of treat everyone equally. If you're active duty, guard or reserve, or a veteran, you get treated the same, right? Again, this is why this condo waiver exists currently. So the association itself, and we should probably do like a class on this to make it a little bit better to digest. But the association has a criteria that they need to provide to a lender, right? And I have a list for myself because it's a good amount of information, right? There's going to be some type of questionnaire the lender sends them that a company is going to answer. Insurance, they also need to have some type of master insurance policy for that to be able to let people know, like, do they have enough coverage in the event something happens? And Lourdes, do let's talk a little bit with what we're talking about is reviewing like the financial health of a condo. Like, how is there a way to actually looking at a condo and being like, oh, this looks like they have money or something, that's probably not the right answer. But is there a way to like see it ahead of time or like when you're looking at places? Because people ask that all the time, actually.
Yeah. So one of the things is asking, and we always ask this question up front: is there any special assessments or pending special assessments? What work has recently been done? Because if they're like, we just redid the elevators, we just did tuck pointing, we just did all these high ticket things, then you know that the HOA is taking care of their stuff. We also look to see if, what's, as we're walking through, and I always tell my clients, let's look at the exterior, let's look at the, at how well things are taken care of. If things are really outdated, guess what? They're probably going to redo it. And when they redo it, it can cost you some money. So look at those things, pay attention to that. And does it have a pool? How many elevators does it have? Is one, are they older? Are they newer? So definitely pay attention to that. And then if you do have any association documentation above, like, beforehand, then definitely look into that. Because if you're looking and you see the budgets and they're spending a lot of money on just random stuff, then that can just be a sign that they may misuse funds, or they're just not doing what they need to do to like lower that. So your HOAs can always go up, and they go up quite often. Every 2-3 years they can see a little bit of a hike in assessments. And as I go, I start to see, like, when my clients first purchase their condos to like now, it's gone up pretty significantly. Depends on what area. So definitely check on those things. And if you do have access, and typically you have to be under contract to get this, is the condo questionnaire, because there is a specific question saying like, hey, is there any specials plan? Is there, like, there's just a laundry list of questions, and you see that form quite often. David, what can you talk a little bit about that?
Yeah. So, the VA, technically, they only have a couple questions that they want condos to answer. So is there any litigation, any special assessments? And if it's a new construction, they want a 70% pre-sale. So those are the three main things that, because we used to, lawyers, actually, funny enough, we used to ask for a ton of stuff from associations, but the VA basically came back and said basically lenders could almost certify this and get it done, which I think is I think it's crazy that they let that happen.
Yeah.
But it's definitely something that can happen. So speaking of that financial health piece, one thing that you will also be able to get is going to be the last year's and this year's budget. So you can actually see how much money they proposed spending, how much they spent. So you can see, like, are they overspending their budget? And if association dues aren't going up, that's also most likely an issue, just because then they have a lot of deferred maintenance. We see a lot of that with Florida, right? And again, I mentioned Florida because in Fannie Freddie, Florida have a whole separate they have all different rules. Okay, that's how bad or good it is. But yeah, you can look at the budget this year, last year's. You can actually look at their bank statements by asking for the balance sheet for the last 30 days. income expense statement. So again, you can see how much money they're spending on things or what they're overspending on. And that's the thing. Like when you get into that association, then you can get on the board. You're gonna attend meetings, and sometimes we'll ask sellers like, "Hey, do you know what's going on with the condo?" They'll be like, "No," and they'll be like, "Well, how could they not know? Because they don't even go to any meetings."
Yeah.
I think that's crazy. But
Oh, yeah, and
and then
the meeting notes is something that you also can
oh
look
yeah,
on, and definitely that would be a good indication. So, sometimes they have, "Yeah, we had the last 3 meetings." I'm like, "Can we see that?" Because then they'll start talking about proposed projects or projects that were not voted on, did not pass. So, you'll be able to look at the minutes and decide if it's a good fit.
yeah, and that's the thing. I see you made a good point with that. So I would ask for the last 12 meeting minutes. Yeah, that's. But sometimes if it's like a small associate. Oh, by the way, because this is a question we get all the time, is that if it's a small association, does it make a difference? Is it harder to approve? It's about gathering the documentation. That's pretty much it. Sometimes when you have small places that are self-managed, it might be sometimes easier, and sometimes it's like pulling teeth because they're like, "Oh, we do everything over text message. Here's our meeting minutes." All they need to do most of the time is put those in an official document or just put it in a Word document and sign off on it. So normally it's a pretty easy process for that to be able to see. Again, condos, there's two parts to it. There's the love part where you fall in love with the aesthetics, the feel of a place, like a single family home would. The challenge is the second part of the financials, all the different things that go with it.
Right.
Yeah. And that's gonna to understand. Lord, like, so what are some of the things with like if I want to like leasing restrictions that might exist? How do those change on condos?
So typically, there is different loan products that would classify, if you have too many rentals, will classify it as a more so like investment, and then Fannie or Freddie won't approve. So you have um, the it's called a non-warrantable building, and
Yes.
that's just meaning that there's just too many investors or too many people renting out their property. So if that starts to get close to that, I start to see a lot of HOA saying like, "Hey, it's getting close to that max. We don't want this to be a cash only or VA only building. We want to make
Right.
sure that we put a rental cap on here, or we somehow control that so that we stay in good standings and we're not put in that predicament or situation." So when something like that changes, they do have to call a meeting. So if you do have a condo or you plan on getting a condo, it's important for you to attend these meetings because you have voting rights because you live there. And you can say, "Yes, I approve," or "No, I don't approve this," and what are the stipulations behind that. So that's one of the ways. Do you have anything to add?
Yeah, I mean, those are great. Those are great points to that. Yeah, it's tough because a lot of times too, property management companies or associations don't factor in. Like, let's say they're going from a self-managed to a property association. We've seen an entire building get disqualified for financing because they didn't collect enough money from HOA dues towards their reserves. So, like you made a good point. Like, this is something that's interesting. The VA is so loose that FHA and conventional won't even touch some of these buildings. VA will be like all day long, let's do it, baby.
On it.
They'll do them. Again, I'm going to use Florida because I had a very interesting experience with a group of folks that basically said it's impossible to do what they want. The association had crazy restrictions. Not only that, the association mandated that the whoever buys in that building must do a 20% down payment. They had a clause. Check this out. This is how crazy it gets. The clause said in there that if the building were to burn down, they cannot rebuild it because it was on the ocean. It was like this area. Yeah, Florida has like a whole separate set of rules and stuff, but basically everyone said like impossible, straight up impossible. It requires a 20% down payment. the house can't be rebuilt if the condo can't be rebuilt if it burns down. Anyways, the VA came back and just said like, oh, there's leasing restrictions in here. Submitted the waiver, they got the approval. So this is why you have to be really careful with who you talk to, because sometimes people listening right now might be like, David and Lourdes, they crazy talking about this. So let's move into the third topic of today's discussion is understanding and knowing what is a condo waiver. Okay. So this waiver was introduced a couple of years ago, right? So any of those buildings that we looked at, rejected, whatever it was, it doesn't make a difference. You can get a VA loan in any building as long as it's a condo. If it's a co-op, you can't do it. Condos, you can. So just make sure that whoever you're working with allows for them. Because just because the VA allows for it, it doesn't mean that lenders can do it. On that.
A lot of the time, they don't know how.
Right, but just because but let's say they know how to do it, their company has to be able to accept them, which is odd. Yeah, that's something I learned recently. And so, what are some good strategies for identifying these condos? Like, are they a good candidate for you purchasing them and using this waiver?
Yeah, so just kind of how you said, you have to be careful. Just because it's approved, you still have to go through everything that we just talked about.
Right.
That's very important. Also, if it's getting denied for rental restrictions and you have plans of renting it out in the future, it might not be a good fit. So say, hey, this building has rental restrictions. I know you said that you may rent out in the future, although you can get a waiver. Is this something that you really want to do? So that's one of the biggest things, is just always wheeling back, your needs, your wants, kind of like what you're planning to do. And sometimes they fall in love with it and say, you know what, I absolutely love it. It has everything I want. I'll just sell this if I move. Like, I'm at the point where, I'll just do that. Then I'm like, okay, great. Then we can go ahead and move forward with the process. But definitely look at these things. It's very important for you to review. And then also, if it has, say if it has pet restrictions and you don't have a pet yet, but you're planning on getting a pet, don't think that you can easily get in there with a pet. You can, get service animals, you can get this, but if you're thinking like, oh yeah, I'm just gonna make it a service animal, this and the other, like, just make sure you have it in place, because it does take a little while to get. And you don't want to like get in trouble with the HOA. Like, they can fine you, they can do all different kinds of things. And it's just not worth it at the end of the day. So really look and identify what you're looking for in condos, and make those like must-haves and deal breakers if they don't meet those.
That's good point on that. Yeah, especially with the pets piece. Like, no joke, we had someone get to a closing and the deal fell like at closing. They're about to sign for their house and they're like, I'm canceling this deal because they couldn't bring their dogs with them. Yeah, so that's why the condo docs are so important to review, like the decks and bylaws and rules and regulations, because a lot of that stuff is in there, right? The VA loan is a powerful tool, but if you can't do what you want with it, then why are you doing it? Now, the step to actually apply for the waiver is you must first, there's a couple things. One, you need a denial to submit for a waiver, right? So the first step is you collect all these documents, you submit them to the VA, they deny it. They send you a letter and it tells you why they deny it. And then they will, then you basically create a letter, sign off on it saying, I'm aware, like, hey, I, David Piatek, I'm aware that these restrictions exist in this building. I still want to apply and use my VA benefits. They'll grant you a waiver. The condo is still denied, but you in your hand have a waiver that lets you buy in that condo. If the condo was denied within the last 12 months, then you don't have to resubmit the condo. So even if somebody else did it, it got rejected, you could just ask them for that and you do it. If it's more than a year, then you have to redo the whole process. Right. So that's kind of like how it works. But like Lourdes mentioned, is that you really have to be careful with these condo waivers, because it's already tough enough to be able to go through all these financial documents and read through them, but you also have to be able to actually like not put yourself in a bad position. Because there's definitely some benefits to doing all this stuff. Lois, you want to talk about some of the advantages of having this waiver in today's market?
Yeah. Oh man, the advantages. So we did mention, so say a client has, they want to rent and there's a non-warrantable building and it's because of all investors. Now there's two sides to this.
Yep.
If you resell, it's going to be very difficult if it's still in that threshold, because now you're looking at cash buyers, you're looking at lower than market, so you're not going to get tip top. But if your plan is to rent it out, have at it, because there's no restrictions for you to do so. So at that point, now they can always change them. But at that point,
Right.
if there's no restrictions, then you can go in there and that can be your strategy. Okay, I'm going to live there for a couple of years and I'm going to rent it out. So that is one of the biggest advantage to get a waiver. And because before, and we had a lot of older people or people who are not active duty or veterans, they said, this is my home, like I want to stay here for as long as I can, but it's denied. And
Right.
now they have that condo waiver. So now, as long as they're okay with, with the two things that disqualify a condo, then as long as they're okay with it, then they can actually get whatever they want. And you can't, even with some conventional loans or FHA, you can't get those. With the VA, you can. So it's changing the game, especially for veterans. And I hear this all the time. Like I was steered away from using my VA loan because it's not VA approved building.
Right. And something else I want to add, not just veterans, surviving spouses, because we recently did a presentation with the VFW and I didn't realize like how many surviving spouses there are. And then it just kind of like, I remember helping a few people a couple years ago, because, like you can buy in 55 plus communities, by the way. You can use your VA home loan to purchase in them.
Mhm.
If you bought a home and you get steered into using, let's say, an FHA loan for because it was a condo, you can refinance into a VA loan. So people that bought in the last 2 years, like it would make sense to refi. Rates are pretty much the same where they were before 2 years ago. So you have some flexibility with that, right? So that's why, when rates drop, let's say you may not be there today, but you've used a conventional loan for sure, you're going to get a better deal with the FHA. So just kind of keep that in mind
Yeah.
when you go through that, because the challenge really is that a lot of people don't know how to do it and don't get overwhelmed. There's definitely ways that you can go through that process to be able to do that. Now, Lourdes, from a realtor perspective, what do you have you seen realtors advise on doing these waivers, or what's the reaction that you get when you tell people that you can do this? Like, what's the real situation for veterans out there for that?
About one, oh, well, I'm trying to think of a good ratio to throw at you, but it's hard. Most of other real estate agents that I talked to, they didn't know this, and they're even saying, "Oh no, it has to be approved." I'm like, no, it doesn't, and this is how you do it. So I know. I think I brought this to you maybe 2 years ago that we should train, some agents around that specifically, because they're telling their clients, and they're a veteran themselves or they're in the veteran space quite often, and they're saying, no, you can't do this. And we've helped so many people use the waivers, and it's denied. And even when when I submit an offer to a condo, I say, per listing, it has rental restrictions, this building's going to get denied. Then I copy my very first, I have like an MLS shows that like I closed on it. Then I have the rejection from the VA. I have the whole timeline there so they can see everything. So I actually submit that over with my offer, just to let them know and educate them that VA loans can actually do this. And anybody else who's a VA wants to purchase in that building, it's rejected. Now they just have to go get a waiver instead of submitting all that documentation over. And I also tell them that. So in the process, when we're working with VA condos, or, I'm educating the other agent, and I tell them, like, I will educate you every step of the way. This is what we need to do. So It's very simple once you put it in that, but they read it and they say, "Wow, this is very good information."
Right. Yeah, I was just laughing to myself when you said that, just because, like, yeah, the process of education is so key to it. And when you said that, we did that. Someone got rejected for a VA loan. Okay, their lender didn't know how to do the waiver, so that veteran lost out on the condo. On the back end, our client came in and was able to buy it with the waiver. Like, that's the irony of this situation. That's why we do videos like this, so you guys can educate yourselves and do
Mhm.
whatever you want with the information. Right? It's here for you. And again, we do it because we hear so much misinformation. Now let's switch gears and talk about our last subject for tonight. And again, you guys have questions, drop in the comment section. If you want to get a hold of us after this, please do so. Um, is going to be how to protect your investment, right? So we talked about a couple of things around reviewing documents, but now we're going to get a little bit more granular. Two things with this one. You are not required to get a home inspection. It's recommended. Yes, it's a condo. I'll let Lourdes explain why, because I think it is relevant. And if it's on the second floor or higher, you don't need a termite inspection. Okay. Because a lot of people will be like, "Oh, I need to get a termite inspection. Why do I need one?" Well, if it's in the second unit or above, the VA came out and said it that you don't need anything done. But what is a home inspection, Lourdes? And like, do you recommend it? Like, what's the real story here?
Yeah, so a lot of people think, "Oh, with condos, like, the HOA is gonna take care of everything." No, they're not. So, it's important just to know what you have to budget for and get that home inspection. So that's kind of like where you're at with that. What is the deferred maintenance that you have to do? One of the biggest things is we see is windows. Windows are not covered by the HOA. Likely they're covered by the homeowner, and that is a big expense. So if you're walking in there and you see all these windows, they need to be replaced at some point. There's either two things that's going to happen: a special assessment's going to come up, or you have to pay for them to replace them. So those two are just not going to be the the nice end of the result. So just be prepared for that. But having that home inspection is going to let you know kind of like your checklist, your to-do list, your maintenance, what's working, what's not working. And it gives you a little bit of peace of mind so that you can budget for that or negotiate that into the contract.
That's awesome. Yeah, thank you for that. Yeah, and they take a couple hours. You pay a couple $100, but again, V doesn't require, but always recommended. So let's talk about a little bit about condo reserves and what they mean and why they're important to know. So outside of the VA, because the VA doesn't have any requirements. So let's talk about the rest of the people or rest of the loans that are out there. They do require a 10% reserve contribution, meaning that 10% of the monthly HOA dues must go into a reserve account in the event something were to happen for emergencies. Okay. So every month they have to see it like clockwork. That's why they look at the bank statements to see where the money is being moved to. They look at a balance sheet to make sure that's all itemized correctly on that. So when you're looking at it, you want to see, are they putting 10% of the reserve away for a rainy day? Because that's just saying, like, if our budget's 100,000, our room for error is $10,000. We have more snow this year than we thought. We have money to pay for it. We had more cicadas than we thought. I don't know. There's a million things that can happen, right? It snowed too much, roof caved in. Snowed too much, we had to do something else. So we had flood damage. All that money is used for that, and then they should also most hopefully have some type of additional reserve account that they are not touching, that it's there in the event there's an emergency, so you don't have to do special assessments for that.
Yeah. Um, yeah, David, can you talk about like what's the importance of reviewing the condo bylaws? I know we kind of touched about that, but is there any type of advice that you should give around that?
They're long and they are boring, so that's the problem. So you have what are called decks and bylaws and rules and regulations. Okay, those two documents basically are decks and bylaws govern the entire association, how things are going to be done, how a board is picked, how a board is fired, how they vote, right? How they can change the rules, right? So that's the decks and bylaws. The rules and regulations are the rules and regulations of the condo building itself. You can't put signage up that your house is for sale. Rules and regulations. You can't put lock boxes on the doors, like on the outside. That's a rules and regulations thing. But then you have these gray areas. Decks and bylaws are much harder to change than the rules and regulations. Okay, rules and regulations, typically a board can change them. Decks and bylaws require a super majority vote, right? So if you have a leasing restriction in a decks and bylaws, that's going to make it really hard to change it to not have it. Okay. But if the decks and bylaws don't have a leasing restriction, but the rules and regulations then can. Does that make sense? So if decks and bylaws have no leasing, then you can't change it into the rules and regulations. If the association in the decks and bylaws doesn't have a leasing restriction, then you can put it into the rules and regulations. Okay, so keep that in mind. Sometimes where the information is important, but they might clearly state in there, like in the decks and bylaws, that says rent or owners. It's all legalese language. So I'm going to kind of like paraphrase it, but basically, if it states in there that unit members are allowed to rent their units freely as long as they're on time with their association dues, then the rules and regulations can't do it. Okay. Mm-hmm. So if there's something definitive in the rules and regulations, and the problem, I think, Lord, is for a lot of people is they're like sometimes 300-400 pages, not like little reading, like full pages, legal, boring stuff. Hopefully you have a document that you can control F. What that means is control find, and then you type in what you're looking for, leasing, and then it'll pull it up. A lot of times that's what we do because there's no way we have this kind of time to review documents for like hours a day to look at them. That should fall on your attorney or yourself to review everything. But yeah, it's important to know that stuff. It's boring, but it's important.
Right. And then also, like, I wanted to touch a little bit about the condo reserves and self-managed and professionally managed. I know with the professionally managed, it's a lot easier, especially when you are. So what that means is you have someone on staff from typically Monday through Friday. They're on site. If there's any issues, problems, you go to them, you report it, say, hey, something's wrong. They usually fix it, or complaints or anything like that. And when it's self-managed, then we typically see this in smaller buildings, maybe like under like 6 units. We'll see self-managed a lot. Now it's still made up of a board. You still have to do minutes, but sometimes we see in those like, yeah, we only meet once a year. We only do this, we only do that, and the HOAs are typically a lot lower. So just understanding kind of what that is and how important that is to you. It's also important for you to establish timeline with that, because if it's self-managed, it might take a little bit longer to get these condo docs than it is with a management company that's there on site. So that can dictate a 30-day close versus a 45 to 60-day close. It just depends on that. We had a situation where it took 60 days for us to close because the HOA company was self-managed and they didn't give us the documentation in time that we needed to submit over to the VA. Once we got it, then we were able to move. But the condo questionnaire was so messed up, and it was like, can you guys answer this? And it was just like NA, like, what do you mean not applicable? We're asking you a question, yes or no. So that's just the difference between the self-managed and the professionally managed, and it's night and day difference. And I'm sure you've seen it all.
Yeah,
where it's like, are you kidding me right now? But yeah, so yeah. I wanted to touch on that.
Yeah, and that's the thing, is that you also pay a big premium for having it professionally managed, especially like when you're trying to order condo docs, because you then have to request. Sometimes it costs like $400 to get those condo docs. Yeah, so that's why you have to be really careful with that. And now that is a pass on cost. I just want to make everyone aware of that, because you have your appraisal fee, whatever that is for your area. You have the home inspection fee, whatever that is for the area. And then you also have condo doc fees that you have to pay for. Okay. So the upfront cost on a condo is much higher than a single family home. And sometimes the self managed ones will do it free. And then you have to be really careful when you request the condo docs, because if you tell them, oh, we're going to get this building VA approved, they may not give them to you, because this is the
Exactly.
crazy part. So associations can't charge you, or no, associations can't deny you if you're doing it for free, right? A lender just asks for the normal documents like they do in any transaction, and they just take those and submit them to the VA. That's it, all that happens. I've had clients that are like, man, we cannot say anything when they were refinancing into a VA loans, because they're like, they will not accept any VA loans here. Like, they're just not for it. They don't want those people living here. And you're just like, what is going on? Anyways, this is real. Like, this is why we do this. It's one of the main reasons that we started VA housing education a long time ago. This has been 7-8 years of educating, like, where I was like, what is happening in the market right now? And this is why we do this. We want to educate you guys on that, because things are constantly changing, and condos are unique because of the amount of people that are in the in this piece. So like, let's say, Laura, we talked a lot about buying, right? What should you be thinking about when you buy into reselling that home down the line?
Oh, well, there's a lot. It's like a loaded question. But you know, so when you purchase it, there's or even I'll give you a good example. Actually, I had a client that was like, I want to sell my building right now because I know that they're talking about this huge special assessment. And once the special assessment comes, it's gonna like plummet the value of these properties. So she got out and she sold top dollar. And then we had something else come up that just threw them down. It was climbing up, and there was it turned into cash only because there was something came up with Fannie Freddie would not do it because of something they wrote in the minutes. So for about 3 months, it took 3 months, and they had already fixed this issue, mind you, for people to go back in there and start being able to close out the transactions. But everybody was in a holding pattern. Unless you had cash, then you weren't closing it. So each unit suffered probably about 20 to 30,000. I even saw one $50,000 because they were just trying to get it, because they had already, they were getting ready to close, and then this thing comes down, and then now they're like, I'm already paying rent somewhere else. So I saw it go down, like a really nice unit, $50,000, like under, because he had already moved, and now high HOAs, high everything. So that's one of the things to pay attention when you're going to be reselling your property, is like, what's happening with the building and when should the right time be. Also, if your area has very seasonality between, like, say like here in Chicago, like, they open up the pools and the amenities, right around Memorial Day, like this would be the time to sell, is like right around Memorial Day, so people can see these really nice amenities, fall in love with it, versus just looking at it from the window, like, yeah, there's a pool out there, by the way, there's this, there's that.
They don't
So
feel it.
they don't feel it, and they can walk out and be like, wow, this is really nice, so that's also something that you should consider when you're reselling as well. And then also follow up what's going on in the market. What is happening? Is there any growth in your market? Is there any, businesses shutting down? Like, what is happening in the market that can dictate these prices? Is it a seller's market? Is it a buyer's market? How prepared can you be? And then also analyzing those comparables. Say, yeah, okay, I see these comparables. This is where my house, if I paint it, if I do this, if I do that, then I'll be able to get a little bit more money for that. And, that would kind of be where you would need to be at that point.
Oh, that's awesome. Yeah, a lot of good stuff, I think, today. So if you guys have questions, please drop them in the comment section. We've been doing a lot of live events, doing more presentation styles, so you guys can get as much information as possible. But it's also important to have follow up, and again, you guys, we're here to talk with you guys. If you have any questions, make sure you guys hit